Hi, everybody. Welcome to our Debate X. As a reminder, we're going to be recording the session and we're going to share a copy and recap this with the group later on. For those of you who don't know me, I'm Dan Abalon. I'm a partner at 2 Sigma Ventures. A little bit about us. We're an early stage VC fund, generally investing in data-driven companies across a variety of industries, usually at the Series A stage. And we're very lucky to have Alex from Trustology, Jill from Slow Ventures, Mona from Melon Protocol, Hugh from Nexus Mutual, and Haseeb from Dragonfly Capital joining us today. A little bit about DebateX. DebateX is a unique event. It's a kind of Churchill Club style debate where we invite a variety of experts from around the tech community to each present a thesis on a specific trend or topic. For today's discussion, each of the panelists will be answering a question. When we look back 5 years from now, or 5 to 10 years from now, what will be the most non-obvious and important innovation in decentralized finance? So here's how it's going to work. Each panelist will have 3 minutes to present their thesis, and then the other panelists are going to show whether they agree or disagree by holding up their high-tech ping pong paddles. Can you guys all hold up your ping pong paddles? Okay, so a vote in favor of a topic, which would be a green ping pong paddle, means that you find it both compelling and non-obvious. So it's not enough just that you agree with it, it has to be non-obvious. A vote against means that you either don't agree or you thought it was too obvious of a topic. After the votes, a few of the other panelists will each have a couple minutes to let us know why they agree or disagree. And then the presenter is going to have a final 2 minutes to defend their thesis. So we're going to repeat for each panelist, and then hopefully we'll have a few minutes for audience Q&A at the end. If you want to ask a clarifying question for any of the panelists, please use the Q&A box below. And time permitting, we'll bring you on the line at the end to ask your follow-up question directly. The final twist is that you, the audience, can also participate throughout by voting for the most compelling and non-obvious thesis. You can go to this URL, it's pollev, pollev.com/TSV debate. And that actually, if you don't remember it, it's going to be in the Q&A box if it's not already there in a few seconds. You can just click on the link and vote. You can feel free to change your vote at any point as the arguments are swaying you. And you'll be able to see the changing poll results in the box that's behind Mickey, who's the shrunken person in one of the boxes that you see. So thanks again to the panelists for all sharing your views and for all of the audience for joining us. Before we dive into the specific theses, I'd love to give each person a 30-second period of time to intro themselves on their firm and their background. So why don't we start with you, Hugh?
Yeah, hey everybody, I'm Hugh Karp. I'm the founder of Nexus Mutual. We do a decentralized alternative to insurance. So it's basically a community that protects each other against risks. And the first risk we're covering is the risk of smart contract failure on Ethereum. Personally, I'm an actuary with lots of insurance background, so and interested in the tech, and that's kind of how it came together.
Great. How about you, Jill?
Hi, great to be here. My name is Jill Carlson. I'm an investor with Slow Ventures. We're a generalist venture capital fund based in San Francisco, investing at the seed stage, but I spend a lot of time specifically on cryptocurrency, both in my role as an investor there and also in my role as a co-founder of an organization called the Open Money Initiative that does work in emerging markets and closed economies on how people are managing their money, and that very frequently intersects with cryptocurrency specifically and technology broadly.
Great. How about you, Alex?
I'm Alex, founder of Trustology. I keep secrets, so I probably should stop there. So no, what we do is we've developed, we build and operate a custodian wallet platform. So there's a bunch of web services and applications, and we let folks make sure that they keep their money safe and also can do awesome DeFi transactions. So I'll stop there and let you move on.
Great. How about you, Mona?
Hi, great to be here. My name is Mona. I co-founded the Melon Protocol in 2016. I think we were the first one of the first DeFi protocols, and we set out to build a decentralized infrastructure for asset management. Prior to that, I spent almost a decade at Goldman, market making in equities and also prop trading across asset classes. And after that, I was a long short equity manager. But yeah, we're in DeFi now for nearly 5 years and very happy and relieved that people like Hugh are working on smart contract insurance.
Great, Haseeb.
I'm Haseeb. I'm a managing partner at Dragonfly Capital. Dragonfly is a global crypto venture fund. We have offices in San Francisco and in Beijing. I lead the US investment team. And I think we're relatively unique in that we have a fairly global picture of what's going on in crypto, not just in the West, but also in the East. And I've been investing in DeFi for a long time. I used to be a software engineer, so I'm a technologist by background. And I've been playing around in DeFi since 2017. So I'm excited to see how far it's come.
Well, welcome all of you. Okay, so we're going to dive right in with Alex's thesis, and I'm going to just read the high-level overview and then turn it over to him. This one's titled, DeFi will overtake CeFi within a decade. DeFi will take over CeFi by volume traded and borrowed within a decade. That's because DeFi, unlike CeFi, avoids jurisdictional liquidity fragmentation by not having a single point of failure. In a post-internet world, this means global-sized pools that dwarf regional CeFi ones. Alex?
Great, thank you. Yeah, I mean, it's probably going to be obvious to loads of people, but it wasn't to me when I started, and we'll see if the audience agrees. Really, the realization I had is that we've now gone global. Everyone's on the internet. But then, of course, would you want to necessarily trust a single service provider, which is what you have to do with centralized finance, to hold all your assets and manage all those assets and potentially block you from using those assets if they don't like you anymore? In fact, the answer is pretty much unequivocally no. Polaris from kind of through to many other trade finance platforms never worked out because frankly, nobody trusts each other to that degree. So now you then have this regional fragmentation, which is really a reaction to that risk. So you kind of subdivide everything in order to reduce the risk and give yourself multiple paths. But what that does, it fragments your liquidity. So your liquidity pools for borrowing, lending, trading, etc., become much smaller as a function of risk mitigation. So what changes? Blockchain is kind of amazing because it reduces the risk through decentralization. So there's no single point of failure, and that includes not just operations, but also issuance or issuer risk. No one can inflate the money supply because they feel like it, and then choose who they distribute to without anyone voting for that. That's really important. So now you're kind of making sure that no one can abuse the system as easily as they can do today, but actually it's still global, logical kind of database. So there's no need to fragment liquidity and then have to do kind of securities transfers or cash transfers, because logically it's centralized, but operationally and control-wise is decentralized. So we now mitigate most of the risks of the CeFi. So you no longer need to do any sort of fragmentation as a means to reduce risk. So you now grow to huge liquidity pools. And that just it's kind of obvious once you say it. But I will remind people who vote for me, it wasn't obvious until I said it. And I'll stop there.
Great. All right. Thanks, Alex. So next up, the panelists can vote by holding up their paddles or, in Jill's case, your books.
Ah.
All right. Pretty good. Well, Haseeb, I think your paddle went up first. Why don't we start with you?
All right. So in short, I think in some sense, it depends on how you define the terms. So when you say DeFi and CeFi, I'm assuming what you mean is DeFi is like decentralized finance as we currently understand it. And CeFi is like all of centralized financial services, not just crypto specific CeFi. If that's what the claim means, which that's what I understand Alex is implying, I think the reality is that there are a lot of institutional players who basically drive most of the actual trading volume in CeFi today, who basically don't get a lot out of DeFi. I think their constraints make it that DeFi doesn't really solve the problems that they have. I think it's really going to be better centralized financial infrastructure that will solve their problems. DeFi solves problems for other people, and that long tail of people for whom it solves problems is massive. But I don't think it's likely to overtake the set of tools that CeFi participants use today.
Great. Mona, do you want to jump in?
Yeah, I was going to kind of echo. I mean, my kind of argumentation was very similar to Haseeb's. I think the way I like to think about it is the DeFi really empowers the long tail, or at least that's what I see. Like we're not after, when we build decentralized asset management infrastructure, we're not building it for BlackRock or Fidelity. We couldn't care less, frankly, if they, used Melon. But we are building it for, the small to medium sized fund manager and the small to medium sized investors. And so when you think about the long tail, I think about the 80-20 rule. If asset management is an $80 trillion industry, then, probably we have a $20 trillion market to unlock. But I don't see it overtaking CeFi.
Jill, you had a green book up. What do you think?
Yeah, so I think Haseeb brings up a great point around how we define these terms. And Alex, I'm looking forward to hearing how you define this. In my view, CeFi, the way that I've heard it used, generally refers to sort of centralized cryptocurrency financial institutions. And that arguably we've already started seeing, right, with Uniswap recently eclipsing Coinbase Pro's data volume. And so that was my interpretation, and that I am in strong agreement with. I think that I struggle a little bit to see on a 5-year time horizon DeFi overtaking Wall Street, though. But Alex, looking forward to hearing what you have to say.
Alex, why don't you take a couple minutes and make your closing statement?
Sure. I think, did we have Hugh as well, or comment or not?
We're probably not going to have time to go through every single person on each round. So
okay, awesome.
Yeah.
Yeah, no, I just so actually, I'm much more bullish. I don't think 5 years, but a 10-year horizon. And then within a 10-year horizon, I do define CeFi as the wider scope, which are the normal banks. And actually, that's based on evidence from Amazon. Amazon focused on the long tail, but what we see, as soon as you start to focus on the long tail and you make the long tail so efficient, as Amazon did for books and music, that actually the the mass-produced stuff that we see right now in CeFi actually turns out nobody likes it. You've put up with the mass-produced crap because basically that's the only thing you could get. But once you see the benefits of modularization and the cost benefits of the long tail, it starts to attack the head and fragment that. So I think we will see an Amazon moment, and I think it's going to be a lot sooner, not 5 years, but within 10 years. And I do mean the wider CeFi, not just the Coinbase of this world.
Great, thanks. So we're going to move on to Jill. To make sure that you're voting, again, it's pollev.com/TSV debate, and there should be a link in the Q&A if you want to open that up. So next we'll move on to Jill. So Jill's thesis is the investable universe will be expanded globally. Today, over 80% of stocks held by US households are owned by the wealthiest 10% of Americans. And the US has it better than most countries, where stock and bond markets may be smaller, more restricted, or even non-existent. For the majority of the world, the ability to earn by investing has always been out of reach. 5 to 10 years from now, we might manifest an enormous, globally accessible universe of investment opportunities, thanks to the open and decentralized nature of DeFi. Sounds pretty hopeful. Jill?
Yeah, an optimist. So really what this comes down to for me was the realization that I think a lot of Americans do not realize. But the reality that in most countries, there's no way to put your money to work. You can earn income, but then there's no investable universe of assets that you can put money into. The closest that you can come to in many countries is gambling, gaming and gambling. And so this is really a vision of the future where DeFi plays a role in opening up those markets so that people in countries outside of the United States, where you can't just put money into the S&P 500 or Apple stock easily, can start to deploy capital. And I really believe that we're starting to see this sort of democratization already playing out in the United States. As I mentioned, and you just mentioned that stat, around 80% of stocks held by US households being owned by only 10% of families. That started to change, what with the Robinhood rally and sort of changing dynamics within fintech, as we can conceive of it, outside of cryptocurrency. And I really think that cryptocurrency is going to drive that next wave. And so just as Bitcoin has opened up borders for capital by being able to open up corridors for remittances, for evading capital controls, all of these types of dynamics, I think that DeFi is going to do the same for the investment universe.
All right, thanks, Jill. Everyone think for a second, and then let's see the paddles.
I'm kind of deliberately doing it in the middle.
I'm glad you are, Mona. I was going to say this would be very boring otherwise. Perhaps it's too obvious.
I'm not sure if that's allowed, but if you give it to me, Dan, I'm going to do this.
Okay, well, sounds like folks generally find it compelling and non-obvious, remember. So Mona, since you held your paddle sideways, you get to go first.
Yeah, so I'd say like it was almost a green for me. Like I'd say I guess like the one hesitation I have is like, for me, it's very obvious, right? But I think I wouldn't like, I set out in 2016, we set out to build a decentralized asset management infrastructure based on that assumption, pretty much. So I fully agree with you. And to me, it's really obvious, which is why it's hard for me to give the full green. But having said that, we've been speaking to investors for the last year and a half, and one of the biggest pushbacks, amazingly, that we get is that people don't think that the investable class is big enough or will be big enough, which I just find like amazingly shocking. I mean, so I do agree that it's non-obvious, as much as I hate to admit it, and so I'll kind of lean a bit more to green, but I fully agree with Jill's thesis. I just think that for me, it's obvious.
All right, Hugh, what do you think?
It's going to be pretty boring and agree. I'm not quite sure what else I can really say. I mean, that's kind of why one of the reasons I'm here building stuff is that for the long tail of people that get excluded for whatever reason, or those communities that can't get access to financial services and things. And it's kind of one of the key things that inspired me to do what I'm doing. So I kind of agree with it. Yeah, I guess the one, same with Mona. It's like, how obvious is it? That's kind of what we're here for. But yeah, green from me.
All right, sounds good. Haseeb, it sounds like you also thought it was non-obvious. Maybe we can focus on that aspect of it. I think your audio is not coming through.
Oh, I'm sorry. Now good? Okay, my bad. Yeah, you keep hammering the point of non-obvious. I don't, in retrospect, I think actually all of us on the stage probably found it relatively obvious that, like, yes, the investable universe is going to be expanded, and that people who normally don't have access to investment opportunities are going to find them through DeFi. That's, at least part of the rallying cry in the long run of what makes this stuff compelling. Maybe I just have an aversion to giving someone a red just because I agree too much with what they're saying. So yeah, I don't know that I have anything more to add.
Okay, it's okay to vote red. Thanks, Haseeb. Alex, we have time for a minute of comment from you.
Well, everybody else felt okay voting red against me. So yeah, anyway, I would echo, it's obvious to probably people on this kind of call, but probably not for most people. And that's why I put the green. And that was super highlighted. I was in Shanghai DevCon 2, talking to a load of folks in China, and basically going, this is all about capital flight, isn't it? And they're like, nope, we have nowhere else to invest our money. Therefore, it's like, oh, wow, I didn't really consider that. So it was completely unobvious to me back then. It's obvious now, but I think vast majority of people will find this not obvious if they happen to be in UK or US.
Great. All right, Jill, you have a couple minutes. It seems like you convinced the panel. You don't yet have everything in the audience yet, though, so maybe you can convince a few more people.
Well, I'll say two things very briefly here. First is, Alex, I think you just articulated the point here better even than perhaps I did. And I found this as well, even in places like Venezuela suffering from hyperinflation, you ask people, why did you get into cryptocurrency? It was as a hedge for your currency, right? And they say, in some cases, yes, but in other cases they say, no, it's because I want the number to go up and I have, there's no other option for me to invest in. So they view it not just as a hedge, but also indeed as an investment. I have to say, I'm very heartened to hear so many people say, oh, this is obvious to me, because it is obvious to me. But I will say, being in a position where I am interacting with kind of two ends of the barbell frequently, one end being conventional institutional venture capital investors and even Wall Street investors. I think that this is very non-obvious to many, many people in that category. And then at the other end of the spectrum, certainly no one on this call, but much of the DeFi universe today is populated by sort of, I think, people who kind of call themselves even degen gamblers and traders, right? The sort of people who you find on Wall Street bets forums and things like that. And those people are, I don't want to detract from them. They're engaging, in some cases, building with all of these tools, but in no way, I think, are they thinking necessarily about sort of this more galaxy brain vision for where it all could go. But again, I'm very heartened actually to hear everyone say that this is obvious.
Great, thanks, Jill. Okay, now we're going to go to Mona, who, at least according to the votes, has the most votes, even though you haven't started yet. So,
okay, so
I'll give a quick. Let me give a quick overview, and then I'll hand it over to you. So, so your thesis is legacy banks will claim avid support of DeFi and launch their own coins with yield farming and rewards. The banks are notoriously slow to do anything innovative, especially when their entire business model depends on the very inefficiencies that underpin the industry today. The recent jump of AUM in DeFi from $1 billion to $10 billion has gotten their attention. And 5 to 10 years from now, the same guys that called Bitcoin a fraud will be issuing and distributing Me Too DeFi products to their clients and claiming they loved it all along. All right.
Yeah, so I think we kind of take it for granted that the banks will just be slow on DeFi and never wake up to it because we're used to them just being slow on everything. But my thesis here is that they'll eventually be forced to get into blockchain and specifically into DeFi in the next decade to keep their customers from running out the door. Not all of their customers, but maybe some of their big customers. So I think the best way to show that this thesis is non-obvious is to read out a few quotes that I Googled this morning from a few of the leaders in some of the legacy financial institutions. So the first one, which is really an indication of how little understanding there is in the blockchain space today, is by Ralph Hamers, the chief executive of ING. And he says, the potential is so huge. And if the top 5 or 6 global banks would put their minds to it and agree on a standard, you could force that standard onto the globe. And I love this. I actually almost feel sorry for the guy because he really wants to get blockchain. He gets that it's important. He's trying to make a big statement about it, but he's totally missed the spirit of blockchain, that it's not about forcing standards onto people. It's about distributing power, democratizing finance, building and empowering communities. And so I think that kind of goes to show that it's not as obvious as we might think to some people. Another one, very controversial, Jamie Dimon, we all know he loves it, he hates it. He loves it, he hates it. Right now, this week, he made a quote saying, it's real. It's been around for 10 or 12 years, and very little effective use has come out of it. It's a very complicated technology that has to be rolled out by use case. So despite his lack of enthusiasm, I'd like to point out that JP Morgan probably has one of the larger blockchain divisions of any bank. So I think that's interesting. And the last quote that I wanted to read out was, and I think this one really hones the non-obvious point of the thesis, is from the CEO of MasterCard. And he says, I think blockchain could be interesting, but the business model isn't proven. A lot of this has to improve and change over time. So for someone who's that unenthusiastic about blockchain, it's interesting that MasterCard are the company with the 3rd most blockchain patents in the world globally. So we've recently seen this huge explosion of DeFi. And we've also just recently heard the SEC talking about all stocks potentially becoming tokenized at some point. So my prediction is 10 years from now, the same guys that are dismissing the technology, the same guys that are talking about forcing standards onto the globe, the same guys who are investing heavily in patents will be ditching those patents in an effort to appear like really open, using words like open source, building communities, elbowing their way into DeFi and launching their own farming products, maybe in an effort to keep and retain their clients.
All right, let's see the paddles. Ooh.
Oh.
All right, while you guys are thinking about your rebuttals, I'll just remind the audience to keep voting, and then also feel free to throw questions into the Q&A box in case we have time at the end for some. All right, so why don't we start with you, Jill?
Thank you. Sure, thank you. So my skepticism here, and I do hope that you're right, Mona, but I am skeptical, comes from having attempted for a period of several years to basically sell blockchain products into banks and just seeing the POC purgatory that they get stuck in. And I do hope that there is sort of a shift of the tides at some point, and it does start to get taken seriously outside of just the innovation labs of banks. But I have to really squint to see that. And I think that the final point that I'll make here just quickly on this is that I'm not sure that I see the necessary overlap of DeFi and legacy finance. To me, it's almost like two separate worlds where there will be bridges between them, but I don't necessarily think it'll be the same service providers peddling and playing in both.
How about you, Haseeb?
So I think so actually Mona agreed on the against Alex's point about DeFi will overtake CeFi, right? So I think we see this clear vision that DeFi is addressing a market that's totally orthogonal to what CeFi is doing. If you have access to legacy banks, you have access to the kinds of products they offer to their stereotypical customers. DeFi is completely uncompelling to you. And to the extent, of course, that DeFi also implies that we don't know who anybody is, people are pseudonymous. It's in some sense completely inimical to what legacy banks actually need to offer their customers, such as knowing who their counterparties are, knowing that they're not violating AML or OFAC restrictions, et cetera. And then, of course, on top of that, Mona claims that they're going to launch their own coins with yield farming. Yield farming, of course, only makes sense in a pooled model, like in Uniswap or in Compound. I highly doubt that if legacy banks are getting onto DeFi, that they're going to be trading against pools. They're probably going to be using products very similar to the ones they already have, like central limit order books, in which case yield farming doesn't really, you can't really yield farm an order book. So I think it's likely that legacy banks will play with DeFi at some point, just because they're curious about it. But I don't think they're going to, in any meaningful sense, transmute their business models to become compatible with DeFi.
How about you, Hugh?
Yeah, I guess 2 points. I just don't see those types of institutions effectively changing themselves so much or so fundamentally to be able to do it. I'd see them, they kind of have to cannibalize themselves to make it worthwhile. And I just don't see them making that decision, like cutting off the cash cows that they're sitting on for a while. And so, yeah, and the other, I guess the other point is, I mean, it's really just about disrupting yourself. And I don't think the big institution is going to do that. I guess, yeah, the other one's regulatory, and that's going to be a very hard one for them to get across. That they might be able to work out a way of getting in there somehow to experiment with themselves, but being able to fundamentally change stuff and get their own customers kind of onto a new model is going to be quite challenging.
Alex, what do you think?
First of all, I think the guys that Mona's talking about are going to retire before any of that changes. So that invalidates the point in the first place. And they're all 6-7 years away from retirement. But so I think that's one thing, the decision makers today. Secondly, I think, take a look at BNY Melon, for instance. I led the innovation function there. It's a brilliant business. They offer many channels for people to interact with. They support a whole array of instruction setting, from fax machines through to phone calls. Yeah, that's what their value proposition is. 250 years of deep trust, plus they'll support you whichever channel you want to, however esoteric it is, which is great, but it costs a lot of money. The whole space in crypto, if we get it right, will be trustless. So you don't need the 250 years of reputation. And then secondly, it's all digital. So you would have to sack so many people that are right now doing all the manual stuff, that the business that will end up being there is going to be so orthogonal to what it is right now, that frankly, I think no organization can survive such a seismic shift. They might kind of push out a lifeboat and launch like a separate thing. But in the way they are right now, it's too much of a paradigm shift to survive. I don't think they will.
Mona, did they change your mind?
No, not really. So I'm just going to say a couple of comments. So first of all, Jill said she hopes I'm right. So I don't actually hope I'm right. Like I don't necessarily want to see banks coming into the space at all. And I also didn't say they would be successful. So I'm not trying to contradict my earlier point. My point here is that I don't know if anyone remembers the Zune by Microsoft under Steve Ballmer, but like when, you know, Steve Jobs came out with the iPod, everyone was like, why would you need an iPod? And then some people saw it getting successful. And suddenly Microsoft tried to come out with the Zune, which was like a total fail. So I just think when people see success and people see it working, they're going to be like, well, we need to find a way to do this because our clients want it and it's successful and we need to figure this out. I didn't say that it was going to succeed. I think like they'll actually, you know, probably be laughed at, but I think that they're going to try. And there's many ways they could do it. Like I kind of use the yield farming coin thing just as a kind of joke, but I think that there's many ways they could get into DeFi. They could provide bridges, you know, like easier kind of bridges into DeFi. They could provide liquidity. I think that could be a thing. And I know that there's a ton of regulatory things that they would have to face, but trust me, if anyone's going to solve those issues, it will be them. It's just that they don't want to right now. And lastly, Alex, I think, brought up BNY Mellon. I'm so glad you brought up BNY Mellon. Like, I know that they are, you know, totally not focused on this, but, you know, just as a maybe side anecdote, you know, BNY Mellon have been up against us for the last few months on trademark allegations because we are called the Melon Protocol, spelled with one L, and we're just like a tiny dot in the ocean compared to them right now. So I think, you know, even though they might not be able to like mobilize and get anything done right now, they're definitely watching the space and they're definitely feeling a little bit pressured by, you know, anything that looks or talks like asset management and sounds a bit like them. So yeah, I think I'm pretty much, I maybe wasn't very clear in the direction I was going, but hopefully that clarifies it.
Thank you, Mona. Well, I'd encourage the audience to keep voting. It looks like you still have a lot of audience support. All right, so we're going to go over to Hugh. So Hugh's thesis is composable capital will create a DeFi liquidity vortex. In traditional finance, there are trillions of assets with long-term goals sitting in pension funds, index funds, and insurance companies. Tokenizing these assets will allow them to earn additional yield while still holding the underlying asset. Stacked yields will become necessary with the active capital of today being considered idle tomorrow. Hugh?
Yeah, so the past 2 months have been really interesting with yield farming. And so this kind of, I guess it came off one particular idea that happened where, like with a lot of the yield farming, you can often contribute some funds to Uniswap and you get a liquidity pool token. And then you can do something else with that liquidity pool token. So that liquidity pool token is actually, you know, earning trading fees and getting exposure to a certain asset. It's an asset of some description. And then you can take that asset and then you can put it in a yield farm, which, you know, get some random food coin and, you know, get some extra yield. So you kind of end up with this stacked yield. And I mean, this is just one particular idea. And I think it's the very start of this particular thing. But if you do have tokenized assets, and so if we get to this world where you have tokenized shares or tokenized bonds and all that type of stuff, then you can then use those and put them into another protocol for some other benefit, whether that's yield farming, or maybe it's not even just an additional yield. Maybe it's morphing the structure of that return and changing it slightly and adding on like a margin loan, or maybe protecting downside risk, or something. It doesn't have to be actually earning additional yield, but it can be doing something to change the financial nature of that first asset. And then you're in this situation potentially where all of a sudden the tokenized version of what you're doing, if that's a tokenized Amazon share or a tokenized treasury or whatever, the tokenized version has much more utility within the DeFi space than it does within the regular CeFi world. And so then all of the people, those pension funds, those insurance companies, all those long-term investable assets all the people managing them have to justify, why aren't you taking advantage of this other situation over here? There's more opportunity. And so they kind of have this responsibility to look elsewhere and potentially and then transform their assets into the tokenized version and then access other opportunities. So yeah, I came to this idea from just this particular, the Uniswap liquidity pool tokens, being able to use it actually in the insurance context. But then I think it has a lot more wider potential. And it was definitely non-obvious to me. I've only kind of picked it up over the past few weeks, really, and month with the yield farming stuff going on.
All right, time to vote. And I'd encourage the audience to ask questions in addition to voting. Let's see. All right. A split group. Wow. Okay. Haseeb, why don't you kick this one off?
So I agree with Hugh that this is going to happen, that in the sense that there are going to be complicated kth order derivatives that are built up within DeFi. Almost surely that's going to happen. Will that cause a liquidity vortex that pulls in all the assets in CeFi onto DeFi? I don't think that's super likely. The other thing is that I also don't think it's super non-obvious that this is going to happen. And I also don't think it's particularly disruptive. Having complex derivatives is kind of, that's the hallmark of centralized finance. The hallmark of Wall Street, right, is creating complex derivatives on top of layering complexity in order to create complicated financial products. DeFi is starting to do that, but it's doing that sort of an emulation of things that people have been doing in regular finance for a very, very long time. And so the idea that the kinds of yields or the kinds of complexity that you're going to be able to get out of taking an Amazon share and putting it in DeFi is going to be better than the kind of weird complexity you can get doing that in Wall Street. That seems unlikely to me, and I think the number of steps that would have to happen of moving the most attractive places where people really want Amazon stock, which ultimately is what determines yields. What determines yields is how much do other people want this thing. That's going to be driven by the overall composition of the market, and I don't expect the Amazon stock market to primarily move into DeFi. If you believe that, then maybe it's a separate question, but I don't see that likely.
Let's stick with the detractors. Jill, I think you put up a red vote as well.
I did indeed. Yeah, I mean, similar to what Haseeb is saying, I struggle to see this because I don't currently see, pension funds and I think the sorts of players that you're talking about moving en masse from, say, Amazon stock into some structured product that allows you to generate yield while also giving you upside exposure to Amazon, so on and so forth. These things that already exist in that Wall Street makes their lunch on every day as it is today. Certainly, to some degree, some portion of a given pension fund's portfolio or insurance fund's portfolio is dedicated to those types of structured products, but it hasn't replaced sort of, run-of-the-mill stock market or other market vanilla exposure. And so I could see maybe some small portion of these portfolios being dedicated to DeFi assets, but I don't think it will create, as you call it, a vortex, although I really like that imagery.
Alex, what do you think?
Well, I
think about a lot of things.
Alexa, cancel. Apologies. I kind of almost have to agree with you because I think in some ways our theses kind of are conjoined, maybe in the sense that I do believe there's going to be vortex that takes over. Why do I believe that? Because essentially I think we're going to be in a place where we can determine risk much more granularly and put it together. So I'll give you an example. I can take Ether, I can leverage it by putting into CDP and I get DAI. I get DAI and then I put DAI into Nexus NXM tokens to get you passive stuff. Actually, at that point, I have a really, really good understanding of the risk as I'm exposing myself to. I'm getting passive yield and I'm getting kind of leverage. That's pretty exciting. Now, could I do that in centralized finance? Possibly, but it'll take me 2 or 3 weeks to structure all that realistically and execute. Now I can do this all automated on blockchain within minutes. I mean, people literally complain, go, look, it took me 3 minutes to leverage this, get insurance. I was like, do you know how long it would take you if you did it going around houses? So people have this warped perception about what's it like today, what's it like on blockchain. And I think once people get their head around that, actually, I now have a whole universe of programmable assets that I can just invest in within minutes programmatically, I think it's going to blow the socks off. And there's also a bigger bigger question. Right now, everyone keeps going on about Wall Street. Of course, it's the most powerful nation in the world, and therefore its stocks are the most important ones. Read Ray Dalio, The Changing World Order. US has 5 to 6 years as a world dominant power. It's going to go down the hill according to many, many projections, at which point Wall Street stocks are going to be worthless because people are going to be doing capital flight to potentially safer havens. If that happens, it's a big if, then you're going to be looking at diversification of assets away from Wall Street, and DeFi would be the go-to position. So I think we need to take a slightly bigger picture.
Thanks, Alex. Mona, did you want to add anything to this one?
Maybe just a couple of thoughts. So I went green because I think it's not obvious. I think that most people still dismiss DeFi and actually just still dismiss crypto in general and don't even take the time to understand it. So the point that Haseeb made, partially makes sense that, yes, true, we have all of this stuff in traditional finance and it's not obvious that DeFi can do it better yet. But I still think it's not obvious because people in traditional finance are not even aware that there's all this kind of stuff happening in DeFi. But I think I think that Hugh is largely right. I also, again, like I don't see, and I voted on this for the first talk as well, but I don't see CeFi overtaking DeFi in the next decade. But I think that one point that wasn't touched on is that yes, sure, you can do all of this stuff in the traditional finance world, but to structure a product like that in derivatives, like no bank is going to look at you twice unless you're doing a minimum $5 million ticket. And you can enter DeFi for, because of gas costs, you probably, you need to have, I guess, a minimum of a few $100s to make it worthwhile because of high gas, but you can basically access similar type products or structured products for a fraction of the price. So I just hammer home the same point that I made earlier, which is that I think this still empowers the long tail, and that's really the beauty of it. And so maybe vortex is a little bit strong of a word, but I went green on balance because I think it's non-obvious, and I agree with the general thinking.
Thanks. All right, Hugh, you have a couple minutes to defend from the detractors.
I guess the only real thing I'd add is that because of composability, we can actually do a whole bunch of things that we haven't even thought of yet. And so all of the comments here about, you can create some structured product, and because we're framing our reference in what we can do in the regular financial world. But what if you could take like tokenized Tesla stock and use it as an entry to an event or something in the real life, or a ticket to something, or an entry to a game, or like something really weird off the wall, and it actually has extra utility inside this space that we can never get in the regular financial world. I mean, that's just completely off the planet, but the internet has millions of cat pictures, and I don't think the people who designed the internet thought that would be a large part of what's going on. And I guess that's kind of the point here. We just don't know what we can come up with. And when you have a fully open programmable application layer for money, what are people going to come up with? Who knows?
I like it, Hugh, the old cat picture argument. Nice. All right, so we're going to go to our last thesis, which is Haseeb. Synthetic crypto dollars become crypto's killer app. Eventually, USDC, Tether, and all the regulated stablecoins will either get shut down or become whitelist only. This leaves only synthetic crypto-backed stablecoins to serve the global demand for permissionless digital dollars. This way, other countries can have their cake and eat it too, transact via US financial assets, but decoupled from US foreign policy. Right, Haseeb?
So I think I summarized it there better than I can now, but I'll give you the very sort of brief high level of the argument. Is that so? Today obviously the largest crypto asset in existence is Bitcoin, but if you look at the most traded crypto asset today, it's actually Tether, and there's been dramatic growth this year in the demand for stablecoins, and part of that is obviously fueled by the demand for stablecoin trading and crypto trading more broadly, but a large part of it is exogenous to the crypto industry entirely, meaning that there's unsurprisingly, with the advent of COVID and everything that's going on this year, demand for dollars has skyrocketed around the world. And crypto serves some part of that. So the story I want to paint here is one that, the traditional hierarchy of money, there's money at the central bank, which is the purest form of money. Then there's commercial bank deposits, which are a little bit less pure. Then there are Eurodollars, which are dollars at foreign commercial banks, which are a little bit more farther away from the kind of original version of dollars, a little bit less regulated, a little bit easier for other people to use. And then now we have this new rung that's starting to grow and really gain traction, which are called crypto dollars. And these crypto dollars are dollars that are governed purely by blockchains. They are not tied to any particular bank or any particular institution. They are permissionless. They're basically dollars as a pure financial asset, but decoupled from the constraints of the US banking system. And as the US has increased the tying of the US dollar with basically it extending its own foreign policy through the way that it enforces its own objectives via its control of the global banking system and the dollar banking system specifically, crypto dollars decouple that. They allow people to get exposure to dollars without having to necessarily buy into the whole bundle that the US government would rather they do. So my claim here is that today we see Tether, we see USDC dominating this market. I think that Tether will eventually go the way of the dodo. I think probably most people believe that that will eventually happen when the cat and mouse game that they're playing eventually runs to an end. And so we'll be left with regulated stablecoins like USDC. And my claim would be that I don't think USDC is going to live the way that it lives in the long run, right? Today, there's only one way that you can transfer $100 million to somebody in 5 seconds, no questions asked, without anybody asking who they are. And that's using stablecoins. And there's no way that's going to persist. If it does, it'll be the craziest banking hack ever invented, such that all of the ways in which companies that have to normally live within the constraints of the normal banking system are, all the onerous things they do to comply with banking laws. If people realize more and more that, hey, there's this special magical backdoor you can use called USDC that just like obviates everything that the banking system has done to regulate financial flows, it will very quickly, regulators will realize this, they'll clamp down on it, and it will move to a model that looks more and more like what traditional banking looks like. And that's going to leave one thing left, to play the role of that digital dollar, which is in so high demand within the crypto ecosystem, and that's going to be synthetic stablecoins, synthetic crypto dollars. So that's my thesis. I think right now it's not obvious because synthetic crypto dollars are still quite small. DAI does much less trading volume than Tether or USDC, but I think at some point it's going to flip, and there will be synthetic crypto dollars that rule the roost, and they will become much, much larger than even Tether is today.
All right, thanks, Haseeb. Audience, keep voting, and let's see the panel's votes. Come on, Alex, commit. All right, green, okay. Alex, why don't we start with you?
I totally agree on synthetics because one of the beauties of kind of digital is that there's no physical settlement. Because as long as you got physical settlement, whether it's fiat or gold or whatever it is, you still have settlement risk. So to me, that doesn't make too much sense. What I disagree with is going to be US dollar backed. I don't think it will. I think you're going to shift gravity towards the most populous nations, so China and kind of India. Probably that region is going to set the benchmark. So that's why I say I completely agree. It'll be stable, synthetics. It's just I'm not convinced it's going to be denominated in USDs.
How about you, Hugh?
Yeah, I mean, I largely agree. My one doubt, which I'm not quite sure, is can we build a super scalable synthetic that can get to the levels that we need it to get to? And makers had challenges with that. I mean, I hope they get there. But they also are bringing up real world assets to scale more, and like maybe that's subject to the same types of restrictions as USDC might be. And then maybe if you go to a more pure version that's just ether backed, then how scalable is that, and can you really get it up to the volumes that you need to be competitive? But I agree with the kind of regulatory approach and all of that type of thing. I kind of see that happening. I'm just wondering if we have the tech or the solution to be able to do it.
Bill.
Me?
Yep.
Yeah. So I foresee one of two worlds playing out here, neither of which you describe, Haseeb. One would be a world in which all of these things are just tolerated in the same way that, Bitcoin is tolerated today, and it's just regulated at the on and off ramps. In the same way that every cryptocurrency pretty much is tolerated today, unless it's violated, sort of SEC rules and how it was issued. But in general, these things are just regulated again at the on and off ramps today. There isn't sort of a whitelist system. There isn't movement towards shutting them down. Or a universe in which all of these things are shut down, and that would go for Maker and DAI and synthetic crypto dollars as well. I struggle to see the sort of middle ground view where some of these things, the more centralized ones of them, I understand that that's the distinction that you're drawing, get shut down or get regulated to death, and DAI continues to exist.
How about you, Mona?
Yeah, I agree with, I largely agree with Haseeb. I think that, I think there's one currency you don't mess with in the world, and it's the US dollar. And if you do, you have to answer, you will answer for it. So I think in the next decade, we'll definitely see, some, we've seen the whole Tether saga going back and forth. And I think we'll, it just takes one headline, or one thing they can use against USDC or whatever, and it down. And I think a 10-year horizon is enough for me to see something big like that happen. So yeah, I agree that the future is probably in more synthetic. I personally would feel more comfortable in something synthetic than something that's physically backed. Yeah, to Hugh's point, I was, I would prefer a synthetic dollar that is purely, kind of ETH backed or dollar backed. I know that there have been challenges, but I feel like, they're probably more likely to be solved in a decade than USDC, not or one of those kind of dollar backed tokens not getting shut down.
Great.
Shut down or challenged, sorry, not shut down.
All right, Haseeb.
So just to address a couple of points that were raised. So one, I'm not claiming that MakerDAO in its current form is going to be, so I want to decouple this question from specifically DAI, although it's one I mentioned, it's currently the largest. It's very obvious it has a lot of problems today, but so does everything in crypto. And I don't think that prevents us from speculating on how it'll evolve in response to increasing demand and increasing constraints against them. The other thing I would say is that, to Jill's point, her claim was that, I can see either of these things getting tolerated or them all getting shut down. And I think, it's difficult for me to imagine a world where there's enormous demand for these things and somehow we manage to whack-a-mole every single one out of existence. That hasn't seemed to work for almost anything else in crypto. And for this in particular, it seems even less likely to me that if there's some team in China or in Russia or something that decides like, hey, we want to get rich by creating a crypto central bank that issues dollars, that there would be a plausible way to stop them without wholesale doing some crazy stuff to Ethereum itself to prevent people from actually interacting with them. All that being said, I think it's, the question of whether or not it will be dollars, I suspect it, personally, I suspect it will be, but I think it's very reasonable to disagree. That said, like the other element of it of like, what's the collateral going to be? How is this thing going to stay functional? Is that I think with 10 years behind us, I think the kinds of collateral that will be available on chain, even collateral that is not centralized in the way that we think of today, like, obviously a lot of the collateral in MakerDAO today is USDC, which is a little bit ridiculous given my claim. I think there will be, the universe of collateral is going to expand quite a bit. And I think that all that collateral is likely to be a lot more stable than it is today. MakerDAO currently is only 3 years old. All this stuff is going to look dramatically different 10 years from now, in the same way that the crypto industry 10 years ago looked like, just this crazy little corner of the internet. And now it's this massive global enterprise. I think we're going to see the same thing in the evolution of crypto dollars.
Great, thank you, Haseeb. So as we're wrapping up, I'd like to encourage everyone in the audience to start to finalize your vote now. But we do have a couple of questions from the audience. So I'm going to turn it over to Mickey, who's going to bring on a couple of folks to ask their questions.
Yeah, so first up, we have Jim Greco. Jim, we're going to bring you on the line now. Feel free to ask your question.
Oh, sure. Hey, guys. Yeah, I was just kind of wondering what the kind of the buy side, sell side relationship looks like if kind of DeFi took off and this became much more prevalent. Does do the banks kind of end up just still owning that relationship, or does the relationship become a little bit more diffuse and the buy side starts owning more of their execution in this type of area?
I could take this one. So, I mean, this is kind of, I guess, playing into my points a bit. I think I get asked by the buy side all the time, if I wanted to buy crypto, where do I start? What do I do? Who do I speak to? My bank doesn't offer crypto, or, they just don't know where to start because the sell side does not offer anything in crypto. The traditional sell side does not offer anything. So my point was earlier that legacy banks are losing potential business they could be doing to, let's say, the new sell side, which is like the new institutional sell side, which is like the Coinbase, the Bitcoin Suisse, the kind of big crypto houses, which are Kraken, whatever, that are able to handle this buy side flow. So I think that it is changing, and that was kind of one of the premises that I thought at some point the banks will be like, hang on a sec, we want a slice of this pie too. And not to mention the fact that crypto comes with very high commissions, it comes with very high margins and spreads, and so it is a profitable business for people on the sell side. And so I think at some point they'll want in.
Nikki, I think we have time for one more question.
Yeah, that's great. So we have one from an anonymous attendee here. So I'll go ahead and ask this one. And Haseeb or Jill, maybe you guys can comment on this. So crypto has democratized startup investing globally. Since these projects are all truly startups, what tools should investors use to make educated decisions with regard to what projects to invest in and which ones not to? There are hundreds of DeFi projects and already 30 with over a $50 million market cap. And maybe we can just expand this more generally beyond the tools, but what do you guys look for in kind of early stage DeFi projects?
Jill, do you want to go first?
Yeah, I'll just quickly say, I mean, there are two aspects to this question. I think the first is just even being aware of what's going on, staying in the information flow. And for that, I mean, there's nothing better for me than Twitter, of just sort of following the right people and seeing what gets surfaced. And most of the time, just don't feel overwhelmed or scared, because most of the time that's how even I feel looking at things that are getting surfaced, where I'm like, I don't know what a sushi is. I should know what a sushi is. Now I have to go out and figure out what a sushi is. But then that brings me to my next thing, which is to just go out and try playing with these things with a very, very small amount of money first, and just getting a feel for them and understanding, is this valuable? Is this real? And then from there, you can start diving into things like security audits. But I would say that those are the first two steps. But Haseeb, over to you.
Yeah, I'm always a little bit loath to give advice to people who are not in the crypto industry how to invest in it, because I think it's just tremendously hard. I think it's true for almost anything, is that, you know, being on the outside, it's very hard to reliably make money investing in an area that you're not an expert in. And that's why, you know, most of the folks on this stage are very, very specialized, and we spent a lot of time learning this industry before we started getting our hands dirty. That said, like I would mirror Jill's advice, is that like the best way, if you really want to do it, is, you know, you need to really get native. You need to spend time understanding who the people are who are working on this project. Where is the community? How do they think? What are their goals? What are the pitfalls today? What are the strengths? What are the metrics of the current products as they're existing today? How much of this is a show me story, and how much of this is, you know, being really valued on cash flows or trading volume that this protocol is generating? So there are a lot of different tools like Dune Analytics or DeFi Pulse that people use in order to get data about how all these things work. Unfortunately, there's no single tool, or there's no Bloomberg for all this stuff. Right now, you kind of have to pick the piece of information where you can find it and then use your judgment. And if your judgment isn't good, then don't play.
All right. Well, thank you. Unfortunately, we're out of time, so we won't have a chance to cover all the questions. We did post all the panelists' Twitter handles on our Twitter, on the Two Sigma Ventures Twitter, so you can follow them there and hopefully get your questions answered on Twitter. So looking at the poll, it looks like our audience found Mona's thesis to be the most compelling and non-obvious. As a reminder, legacy banks will claim avid support of DeFi and launch their own coins with yield farming and rewards. So congratulations, Mona. Personally, I found all the theses very compelling. So congrats to all the panelists. And I guess we'll meet back here in this virtual universe 5 or 10 years from now and see what actually happens. But I want to thank all of the panelists who did such a great job. And also thank you to everyone in the audience for joining us for today's DebateX. And enjoy the rest of the day and stay safe. Stay safe, everyone. Take care.
Thank you.